Hello, fellow traders. 'Tis I, the Rumpled One. Trading breakouts. Price action. There's basically two things. You're either going to trade a breakout or you're going to trade a reversal. I mean, that's simply what it is. Price is going to be breaking out of one region and entering another. It's going to cross some boundary, and you consider that a breakout. Now, breakouts can be things like the 0, 25, 50, 75 psychological levels. They could be every, the 10, 20, 30, 40 sweet spot levels. They could be anything from the last hour's high, the last 4 hour bar high, the highest high over the last, you know, 17 5-minute bars. It doesn't really matter what it's breaking out of. It's just that it's a breakout. And a lot of times people talk about false breakouts. There's no such thing. Either it crosses that line or it doesn't. Even if it only crosses it by, the fifth decimal place of the price, it crossed the line. It broke out. Now, it might turn right back around and start heading the other way, but that doesn't mean it wasn't a breakout. So there's no such thing as a false breakout. Some breakouts are just a little bit bigger than others. Let's move on. Okay, I bring up my dashboard, and what I want to look for over on the daily GPS, is there anything that could possibly break out? And you can see here that the New Zealand dollar is it's moving down now. It's 7 pips below the highest close. Also, I can use my high top bottom low or my daily wick zone um, gauge here, and you can see the New Zealand dollar broke out. It's above the high zone. You can see the pound dollar broke out because it's below the low zone. Let's just bring up here a blank chart. Simple candle chart, and we see we've got the pound dollar. Well, let's add simple indicator here, the TRO high low 5. And let's turn the gauge on. We've got the high, we've got the low. We can also show the open, and if we want to, we can also show the close. And just for good measure, we'll show the midpoint. And we might as well show the pivot too. Why not? Let's load up everything. Let's use the daily period, but let's only use one bar, and let's use yesterday. So we're going to look at everything for yesterday. Hit F11 and it puts all that stuff away. Now, we can expand the chart here. We're on the H1. And if you grab this, you can bring it over to get this out of the gauge. And you can see here, this was the breakout right here below that low. You see price touched it again, and the third time in this case was a charm. Well, if I scrunch the chart, maybe we can see it. Yeah, right here, 1, 2, and the third was the charm. So all you do is you wait, and when it hits here, you enter the trade. Now, you'd say, well, where would you put the stop? Well, you can just look and see here. And you've got some highs here, so probably, and you can see there was a low there that bounced. So you see, probably you want to put the stop maybe a couple pips above that, and that would give you the trade. That would give you a cushion. And so you can see here, it's 27 pips below the low at the moment. And this is just a simple way of displaying the lines you need to make the trade. And I think we also saw that there was the New Zealand dollar. Now, if we wanted to, we could just take this and drag it over. But that sometimes can be a pain having to do that all the time. So I wrote a little change chart indicator here. And let's put this about 200. There you see that. And I also wrote a change chart period indicator. Because even though you can put the toolbar up here, that takes away some screen space. Oh, I've got that on the wrong side. We want to change the chart, so we'll put it to the on this side, and it went too far. So to fix that, we can do that, and it's still too high. So let's move it down a little bit. And that's how you work with these indicators. So you see here we're at the pound dollar, but we wanted to click on this and switch to the New Zealand dollar. And you can see here once again there was a breakout. And the breakout was here. I wonder, maybe I've got the pivot calculation wrong. Well, we'll worry about that later. I usually don't use pivot anyway. So, once again, here is what the line you want to look for the breakout. Right here, you see it touched it, and broke through. Touched it, broke through. See, it came down the other way, touched, came down the other way, a breakthrough. Came down the other way, see, touched. So is it going to work every time? Of course not. Works some of the time. So what you might want to do, you could always go up a time frame and see if possibly maybe if you go with a higher time frame, you know which way to trade. Or here at the daily, you're going to trade with that candle color. And that's kind of bugging me about the pivot. I guess I got some work to do. Also, since you're trading multiple pairs, you need to know when things are breaking out. Well, one of the indicators I wrote recently is the percent and range, where you can change whichever time frame you're looking at for the breakout. So you can see here we had a nice break on the euro. And there it was. It broke out once. It broke out a second time. I mean, it's just very simple. You can see here it touched it, and then it pulled back, and then here we went again. We can look at it on H4. You can see there you had strong H4 bar, or you can just look at the daily and see here if you go with the color of the day, it was a profitable trade. I also have my other, just the simple breakout indicator. It's a gauge, and once again this one tells you, see, we have a high break of 2 pips right there on the Australian US dollar, and you can see here on the Canadian it's reversed 2 pips. The dollar franc, it reversed 2 pips. See here, dollar Canadian, low break 16. That's on the daily. We also have weeklies and monthly breakouts. So you can see here on the monthly it has reversed 2, but on the weekly it's up 10. And this dashed line, that's the monthly. The dotted is the weekly. And one of the things that I've learned is if you trade in a direction of the previous day's candle, it's usually profitable when you take these breakouts. And you can see here the potential was 37 pips to the high to open. Now, high to top, which this is the top of the candle, and the high right there was 12. So if you would have entered at the open, you had a chance to make 37 pips. That's the TRO, wick size indicator. So the idea is we can use something very, very, very simple, which is a horizontal line placed at the high, the daily high and the daily low, and we can use that to trade breakouts. You see, price is the same on all time frames. I've said that more than once. And you can see here, of course, there were a lot of trades between the open of this candle to get here. But if you're just focusing on the one trade, that's the trade. It's a profitable trade there. Is it always profitable? Of course not. So, fellow traders, as always, it's not what you trade, it is how you trade it. The Rumpled One signing off.